Hello everybody. In the current affairs this week, the week ended 1st of December 2024. This week, the government of India released its data in respect of the GDP growth of the country. The GDP growth of India in the quarter 2, which is the quarter starting from 1st of July and ending on 30th of September, has declined to a low of 5.4%. This is the lowest rate of GDP growth in last 7 quarters. The reason for this kind of low growth of the Indian GDP is attributed to lower capital investment by the government, and this has led to the slowdown. The sector which contributed the maximum for the decline of the GDP rate was the manufacturing growth. The manufacturing growth was on a sharp decline. It seems that this figure of decline in growth is more cyclical and on account of certain reasons limited to that particular quarter, but the structural story of India remains intact. Let us see how things take turn. But the fact remains that in the next meeting of the RBI Monetary Policy Committee, the RBI would definitely be cognizant of the fact that there is a decline in growth, and this might lead them to take a decision that it is a right time to at least start looking at rate cuts in India. The another interesting piece of news which I wanted to discuss was that I just went into the details as to in this year 2024. Now December is the last month of the year. So in the year 2024, which were the best performing equity markets across the globe? And the answer to it was that the Karachi Stock Exchange, KEC 100, was the best performing benchmark across the world. It was up by 60%. The next best was Nasdaq, which appreciated by 29% in the year 2024. And the third best was S&P 500, which was up by 27%. The Indian Nifty Mid Cap and Nifty Small Cap were up each by around 22% each. The interesting part as to why the Karachi Stock Exchange KEC 100 was so sharply up was that the international investors thought that this market was at a very, very cheap valuation. The price equity multiple, which is the PE multiple of KEC 100, even today is just 3.1, while as the Nifty PE is 22, Nifty Mid Cap PE is 42, and Nifty Small Cap 250 PE is 34. So at times what so happens is that international investors take some tactical calls and start investing into some markets which are dirt cheap. So this was the reason why the KEC 100 appreciated so sharply. And this is the reason why the countries in which the structural story and the growth story is much appreciated by the world at large trade at such high multiples. This week, the Indian stock market were in a strong mood. The Nifty 50 was up by around 1%. Nifty Mid Cap was up by 2.5%, and Nifty Small Cap performed exceedingly well, and it was up by 5%. The FIIs continued to be sellers modestly and they were sellers to the extent of 5,000 crores, but DIIs were buyers strongly, and they bought Indian equities to the extent of 7,000 crores. The fear for everybody who was looking at the Indian stock market was that the small caps are richly valued and there is going to be a substantial correction in the small caps in the times to come. But this week gave a different trend, and the small caps continue to be strong in terms of the price action which it commands. An interesting segment in the Indian stock market and its price movement was the Nifty defense stocks. So the Nifty defense benchmark this week was up by 11%, and in last 1 year Nifty defense benchmark is up by 87%, but it is down by 26% from the 52-week high. So this is the kind of sharp movement the Nifty defense constituted stocks had in last 1 year. The global commodity markets were in a softer tone. Brent crude was down by more than 2%. Gold was down by more than 1.5%, and silver was down by more than 2%. The US market were in a positive trend. Nasdaq and S&P 500 both were up by more than 1% each. This is all for this week. Thank you.